Yeah, welcome back guys to the analysis hour. So yesterday we did some pretty good prediction, and I believe everyone that watched that video before the market opened is deep in profit, and that is why I advise you guys to always watch this video to the end. The more you watch the video to the end is the more you become a better trader, is the more you understand gold and its dynamics. I told you gold is one of the trickiest instruments to trade, and if you can be able to grasp gold, you should be really good with other currency pairs. You should be really good. Yeah, so this is our yesterday's analysis. We said this was gonna be our entry zone. As you can see, the market came right at the middle, and those who are watching this are deep in profit. How many pips? Let me check the pips, and ensure that you subscribe to the channel and turn on the notification so that when these videos are posted prior to the market, you are always in, and you know, you learn before the market opens. So this was 216 pips. Yeah, so those who watched this video up here are probably made 216 pips deep in profit. Yeah, so we want to check again where is gold headed. Now before we get to that, let me just clear the chart and see a couple of few things. So let's check on the 4 hour. So since now we know where the market is going, we just need to check on the 4 hour and decide on a couple of few things. First, we must identify the all-time high. So on your screen, if you are with the trading view, 4 hour minutes, you should be having your all-time high marked there. So I'm just gonna name this all-time high. So that's gonna be ATH. All-time high is here around 26.85, 86. Yeah, so that's our ATH, and there are a couple of things that we need to understand here. So that's our all-time high, and the market seems to be in a range. Okay, so where is the lowest low of the range? The lowest low of the range must be found somewhere here. So this should be the lowest low of the range, which is probably this one. Yeah, so we have our all-time high and the lowest low of the range. And we can also get the highest high of the range. So the highest high of the range is actually at the nearest resistance. So the nearest resistance is right here. So this is our nearest resistance. This is gonna be our nearest resistance. Let me just draw the wicks. So I like dealing with the wicks area because resistance is actually the zone of rejection. So if you can identify several wicks that are getting rejected in a given area, then that becomes your zone of resistance. So I'm gonna mark this zone of resistance, ZR, for zone of resistance. Then what else? Now we know where the market is trying to go and why the market is rolling back a little bit. The market is rolling back to tell us that, hey, we are at a resistance zone. Okay, now there's also a couple few things that you need to check. One of it is the pattern, the ICT pattern at that point. What is the market telling you, or what structure or market structure is the market drawing at that point. Okay, you use market structures to know who is strong and who is weak and where the market is probably going to break to. So if you have a look at this chart, roughly, you should be able to see an inverse, something that looks like an inverse ascending triangle. Okay, let me just draw that so that you are able to see what I mean. So if you look at this chart, you should be able to see something, a shape like this. A shape, a shape. How is that shape? Okay, a shape like this. You should be able to see a shape like this. Okay. Yeah, you should be able to see a shape like this. This shape is actually the opposite of this one. Let me put, okay. So this shape is actually the opposite of ascending triangle. So this one is an ascending triangle, and the shape I've drawn here is the opposite. So if you have a look at this, normally they are not that perfect, but if you have a look at these two shapes, you realize one is the opposite of the other. Okay, so one thing, you identify where the shape has been found, and the most important thing is why it is, where the pressure is, and why it is an ascending inverse or ascending triangle. So this one is an ascending inverse, this one is ascending inverse, and this one is the ascending triangle. Okay, all of them are ascending. Okay, so you locate where the resistance is. The resistance is at the top of all of these triangles. Okay, so we have the resistance there, and this is where the resistance is. Okay, the resistance is at the top, and most of the time the market squeezes, it pressures towards the resistance. It creates pressure towards the resistance to break above the resistance in all these two patterns. Okay, yeah, so having that in mind should give you an idea of what you expect or where you expect the market to break to. Okay, so now that we have the structure analyzed, now let's get to the other ICT structures and price action, and the price action on the chart. So let me just delete this. Where is it? Okay, let me just take this out. Yeah, so now we have our beautiful clean chart. Now in this clean chart, we need to know who are present in this market. Now before we get to that, we need to use the technique we used yesterday. There's a very powerful technique we used yesterday, and I don't want you guys to miss out on that. Always watch this video to the end. There are techniques that I drop in between the analysis, yeah, that will help you do your own analysis. So there's a technique we want to use. In the ZR, right above the ZR, we have our all-time high. Okay, now yesterday, before we got to the ZR, we were using an imaginary liquidity grab right above the ZR, the zone of resistance. So nowadays, today, the market has reacted to the ZR, so we need to now leave the ZR and use our ATH as our all-time high Fibonacci reference. Now we have our ATH. We're not gonna use any imaginary high since that is a very key level. So that's gonna be our our swing high in this region, and our swing low is gonna be the one of the range. Yeah, this swing low at the range is the one we're gonna use to do the Fibonacci. So our Fibonacci is gonna start from the swing low all the way to all-time high. Okay, so, and also another reason we are going to the all-time high is because our zone of trade yesterday, you remember our zone of trade. Let me just draw the zone of entry of yesterday so that you guys can see it. So zone of trade was to be used, was to be referenced using the previous order block. So right at the middle of that block is where we expected the market to come during Asian session, and a buy entry was expected here. Yeah, a buy entry was expected here, and that video will be linked on this video so that you watch it to the end. It has got a lot of analytical procedures that can help you do your own analysis. Yeah, so we expected to pick a buy here, which happened, and it all went all the way up. I'll show you the indicator where the indicator sent the signal buy here also before this video ends. So the buy was picked right there, and the market has been buying ever since. Now, before we proceed, we want to actually see what the market did with our level. One, the market respected our level and it bought at our level. Now, what price action did the market form at our level? So we need to study what happened at our level. This is for our guys. Yeah, so what happened at our level? The market went bearish during the Asian Open. Where's my arrow? Okay, so the market went bearish during the Asian Open and reversed and reversed. Okay, and the market reversed. Okay, how did it reverse? What was the price action? The market reversed with an engulfing, a bullish engulfing candle pattern. So if you look at this, you'll realize there was a bullish engulfing candle pattern. Yeah, so after rising at this top, this is where I advised you guys to trade. So you are to wait for the market after showing you a proper price action and rising above. This is where you are supposed to place your buy. But for those who are using our robot, the robot picked it right at the start, somewhere here. So they were very early in profit or early in entry. Yeah, so there is a bullish engulfing candle pattern. So we agreed that we're going to be using BLE for bullish engulfing candle pattern. When you see BLE, that's bullish engulfing. When you see BRE, that is bearish engulfing. So since we are dealing with the bulls right now, we are interested in the BLE. Okay, so now we want to draw a Fibonacci. Okay, we need to draw a Fibonacci, and we've already marked the levels. We're gonna draw it from the lower purple line, this point. Let me make these levels purple. There are people who think those are stop losses, or blue. Let me just make them blue or purple. Yeah, so that you don't confuse the levels to maybe stop loss or take profits. Yeah, so we want to draw from 2604 to 2684. That is one Fibonacci, and there's also Fibonacci we're gonna be drawing at from 2604 to this point here. Let me mark it to 2677. So I think we should start with the small Fibonacci. There's one thing you're gonna learn here, very powerful. So the small Fibonacci starts, we want to look for congruency in the fib levels. So this is our small Fibonacci. I'll be combining two Fibonacci. So this is our small or short Fibonacci. Then our long Fibonacci, just draw it from outside here, from low to the ATH. Okay. So now you should be very strong. Having these two Fibonaccis and your analysis in place, you should be very strong. Today is Monday and we don't have any fundamental news to expect. There's zero on maybe if you have any low impact or medium impact, but high impact, there's no release today. Yeah, so that does not mean the US dollar cannot be affected. Remember, the geopolitical events are not oftenly published on the news site, but they affect your trade regardless. Always remember that. Always keep yourself posted with the current geopolitical events. We have a situation in the Middle East, and it affects the dollar. Okay, it affects the dollar. So we have our two Fibonacci on the chart, and for you to use this powerful Fibonacci strategy I'm going to give you today, you have to follow this video again and again to the end, because this is going to save your losses, it's going to save your life, it's going to save your trades. Okay, so we are combining two Fibonacci. We have already drawn them. Now we want to look for key levels of these Fibonacci's and draw a zone. So we want to draw a 38.2% zone and a 61.8% zone. So why am I using zone instead of a level? I want to combine the two 38s of both Fibonacci's to come up with a zone, and the two 61s of both Fibonacci's to come up with a zone. So let me first start with the small Fibonacci. I think I should use white lines. Yeah, so the small Fibonacci 38 and the small Fibonacci, the big Fibonacci 38. Okay, so that is the two white lines form the big Fibonacci 38 level and the small Fibonacci 38 level. Now we are coming to the big 61 and small 61. So big 61 is this one. I think I should make it yellow. Yellow is much more shouting than all these colors. Then we have also the small 61. Yeah, so after drawing that, I can now delete my Fibonacci's and remain with the zones. Now in the zones, I also want to do some technical analysis. Let me just do away with all these boxes to just clean up the chart. Okay, so I want to draw a box between the whites and a box between the yellows. Okay, a box between the whites. Okay, nice. And I remove the whites. And I want you to also give the boxes a study. Yeah? What actually happened in the boxes. This is what will open your eyes deeply in Forex trading. No one trains you this anywhere on YouTube. No one will tell you this anywhere on YouTube. Nobody will tell you this. And these are the levels that the big banks and the institutions trade with, and I'll show you how they trade these levels. And they don't, these are things that I've studied. I've seen this happen repeatedly. Yeah. So I just wanted to learn what is happening at these levels. I want you to learn what is happening at this level. Study these levels. So first, let me name these levels. The first one is the 38 zone, Fib 38 zone. And the second one is Fib 61 zone. Fib 61 zone. Fib 61 zone. So in these fibs, in these zones, the letters are too big. Let me give it something like 20. Yeah, 20 is okay. Yeah. So in these zones, 20 is okay. So in these zones, I want you to identify the psychological levels, or look for the round number price levels at these zones. Look for something that ends with 0 or ends with 5 at these zones. So in this zone of 61, the upper part of this zone gives us which price? Okay, the upper part of this zone gives us 26.35. Look at that. And I want you to also look at what happened at 26.35. That is a psychological level. So at 26.35, a mitigation happened right here. Mitigation happened and the price continued up. Okay. Now we still want to study Fib 61. What is the lowest level of Fib 61? It's 26.30. What is that again? A psychological level. 26.30. And right in the 26.30, I want to now open your eyes even wider. I want you to see something that you are probably not seeing. So if I just roll this back, I want you to realize that there is a fair value gap here, a tiny fair value gap. So if you just stretch it all through, you'll realize our level had a very interesting price action. We had a fair value gap right there, and right inside these levels, the price action that produced or the price action in that region was a three white soldiers rally. So we had a rally of 3 white soldiers. So if you can see, we had a rally of 3 white soldiers right here. See that? 3 white soldiers. So that was a bullish impression, and right there we had a psychological level at the fair value gap. And before that fair value gap, there was, I think in other time frames, we'll check it, there was a bullish engulfing, and there was also some, there was actually a bullish order block. We'll check that later. So I want you to study now the 2635 and 2630. Those are psychological levels. They are round numbers, and you round down. Okay, round down, don't round up. Round down means you're gonna remain with 2630.000. The upper one, 2635.000. Okay, so if you round down, you will definitely know and understand we are having a very interesting level there, and the price action showed that this was actually an interesting level. So what you are learning at Fibonacci 61 is that it lies at a psychological level. Don't just draw a Fibonacci. Check if there are key levels, if you have an institutional level at that point. Okay, these are levels where the institutional market executes trades. Okay, so that is one. So now let's jump to Fibonacci 38 and see what it actually says. Fibonacci 38, we have at the upper end, we have 2654 and 2654, and at the lower end we have 2646. Not much to say, but now we are going to the mid section of the Fibonacci. Okay, if you have Fibonacci 61, Fibonacci 38, and Fibonacci 23, the mid of the three is Fibonacci 38. When the trend is very sharp up, it normally uses Fibonacci 23. When it's not that sharp but strong, it uses Fibonacci 38. But when it is saggy, it uses Fibonacci 61 or 78. So in this higher Fibonacci's, we have 61, 38, and 23. So in the Fibonacci 38, you want to identify the mid section of that Fibonacci. Because it's already a zone, so we are looking for a psychological level inside that zone. Okay, so we have the mid section right here, and if we put our price level, we are having 2650. So since we have a 2650 right there, we do away with all this, which are not psychological levels, and now we understand there is a psychological level at that zone. Now, why is that zone important? Why is 2650 important? This 2650 helps you to know if the market is still experiencing some retracement. That is the retracement level again for you to take on that trade. 2650. Okay, yeah, all these values you round them down, so 2650 will be 2650.0000. okay, so that level is the level where another retracement should be taken back up. If the market experiences a fall, it should fall to that level, and at that level is where you should watch for reversal candle patterns in lower time frames, like 1 hour, 15 minutes, 30 minutes. At that level is where you make use of 15 minutes, 30 minutes, and 1 hour to look for reversal price action. A warning: when the market has been analyzed to go up and it is experiencing a retracement downwards, and I said, when the market gets to 2650, you should buy because that's the level. No, that is not a trader's way of taking a trade. The market, let the market flow as it comes. Then when it is reversing, you watch it on 30 minutes and 15 minutes, and you see it rising. That is when now you confirm that your level has been respected and the market is going back up. Now that's the genius way of trading. When you trade like that, you now start crossing the line of losing to the side of blues. Yeah, you don't catch the market when it is flowing down to buy. Let the market react with your level and check for reversal candle patterns in the 15 minutes and 30 minutes time frames. I hope that is well understood. Okay, so that is what to do. Respect the psychological levels and trade or check for reversals around those levels. First, know the trend. First, know the trend. I think I should list that down here. Number one, know the trend. Know the trend. Know the trend. Number two, use fib technique. Fib technique. Fib technique. Let me just use that. Okay, number three, fib technique, know the trend, fib technique. Of course, all technical analysis are done after fundamental analysis. It should be fundamentally correct before you come to the chart. You should know what is happening to the currencies you're trading, what's gonna affect the currencies you're trading, and this will really help you to execute winning trades. So first, know the trend. Second, use fib technique. Third, identify market structures. Then four, what else? Price action. Identify price action now falls under candle patterns. Candle patterns is very powerful. Candle patterns are the footprints of what's happening in the market. Then what else? Respect retracement levels. Respect retracement levels. Respect retracement levels. Yeah, very if you do this, you have crossed to the winning side. Just do this every day. Number one, I think I should put it at the top of the list, is fundamentals. Hashtag. Am I going? Yeah, so the dollar is fundamentals. Your dollars rely on the fundamentals. Then number 1, 2, 3, 4, 5. Then you will be good. You will be good. Yeah, so I think you have understood everything. Currently, the market is going up, and those who are holding buys, please still hold buys. The market needs to go to 2700 and create a new all-time high. So this is probably going to be broken. The market is going to break this resistance block and rise above the all-time high. Maybe if it gets to the all-time high, we're gonna get a short retest, something like this, before it continues up and up to somewhere around 2700, like you can see up there. Oops. Okay, somewhere there is around 2700 and all the way to 3000. So gold is actually gonna ride on the geopolitical influence. Those who are buying gold are actually buying a lot of it right now. Yeah, expecting more rise in gold. Yeah, thank you very much, guys. I hope the content of today helped you. There's a video on this description that is gonna help you on how we executed the previous buy. And watch this video to the end. Watch this video to the end. It has a lot of techniques to learn, a lot of market techniques to learn for free without paying a single coin. There's no reason you should be losing while we are here. Okay, so thank you very much. Remember to turn on the notification bell so that when we go live, you are there. When we upload any video, you're there to watch and learn. All these videos are well researched, out of experience. We put out knowledge we believe is impacting lives and making our followers better traders. So thank you very much, guys. Have a great day. Good luck in your trading. Yes.